TGIF, everybody, and happy NFP Day. Hi, Kevin, Brock, Ingmar, how are you guys doing? So, actually, the dollar did not put in a 2-week reversal, but not bad action going into a Friday. Shahab, how are you? Esther, nice to meet you. And let's take a look at the weeklies here going into the NFP. So, on the week, Euro's still up. It didn't give a 2-week reversal. The Dixie needs, it's still possible, 90.22. So we're about 35 points away, depending upon how things play out after the NFP. And this was a short call this week. The pound, when we were up there, pound is lower on the week, so it's struggling. Could we generate another high next week? Yeah, that could happen. But this is really the best call of the week. Of course, the stock indexes were Monday, and when I thought we had a key reversal, and that was a big win. And then I tried to short it yesterday, and of course, it made new highs in here. So, and NASDAQ finally made new highs after the S&Ps. As you can tell, even though they're making new highs, it's the 1 millionth divergence up here on multiple time frames, 4 hour, 2 hour. Okay, daily is still under 70 on the S&Ps, and even more glaring in NASDAQ. Look at this. So I may attempt it again. Yeah, okay. But this was probably the best call of the week. We don't have a breakout yet over 104. So I was talking about it down here. And when you look at the weekly candle in yen, that's a pretty good weekly candle in yen. Not as great in the dollar. See the difference? It's a hammer, but you already have a nice solid blue candle off the wedge line and threatening to come out on the upside. So right now, the yen looks the best going home for a long dollar trade. And gold got killed because of what the yen did. Here's a weekly in gold getting hit hard again. The chart of the day, if you saw it yesterday, you have a reversal week. Now, why can't we have something like this in gold from this week's highs, right? And this was a pretty good correction. You know what? When you look at it, it's not such a great week. It's, looks like a potential failing rally. And why can't we have something like this from here? I know most people are thinking 23 is going to hold. I certainly wouldn't buy it here. And I don't know if we're closing above it. I don't know if we're closing above his buy signal. But the action in the yen, if it's just beginning, and we're going to 109 to 110.11, there's more downside left in metals. Does that help you, Sanse? Okay. And
I'll discuss that later. Yeah. Good morning.
Oh, okay. Good morning, buddy. The commodity currencies are still the strength. Look at the week it had. This is the Aussie and the Kiwi. Done nothing wrong. Yeah, we backed off from the highs, but actually, I think next week, if we get a rally in Aussie, one more high, that kicks in. We're going to have this, right? Confirmed high, first divergence, right? And at a new high, it'll be our second divergence, and maybe it'll be under 70. So this is something I'm looking at most likely for new next week if we make new highs if we make new highs today, I don't know if I'll fade it. Maybe a toe in the water. But I think this is setting up too with weakness in gold and, even copper. Peter Goodburn yesterday said copper's in a topping zone, and he's been pretty good on calling some big turns in copper. So paying attention to that. I hope everyone had a good week, and why don't you cap it off your good week? Anyone do okay in the yen? Any of my calls or the team's calls help you out this week? Anyone catch the bottom in the yen? Avoided being long gold during the sell-off after the yen turn? Anyone, how about shorting cable up there early in the week? Hugo, okay. Did the yen? Oh, nice, Brock. Okay. So what I would say is if we helped you this week and you're not a member yet, help yourself more and take advantage of these prices while it's still there. Of course, we, goes till the 25th. But while we're doing this, I don't think you could get the the $1 trial. Okay, so you may want to consider if we helped you out, say thank you this way. Coming in this next week, the light program.
No,
It's
the
awesome to have you there.
Yeah, there you go.
I was going to say the offer is for the premium plan. Obviously,
Yeah,
the
it's
light
premium.
stays as
Yeah.
it is. Yeah.
Yeah, but still, I mean, the light plan. Hey, if you're on the light plan and you can come listen to the daily roundup webinars, great.
Go ahead,
We'll have you
Clay.
there. Great.
And European crossover.
And the European crossover. Sorry, I didn't mean to. Yeah.
Okay.
I remember that too. I'm always sleeping through that. So anyway, I didn't mean to intrude on
It's
your,
okay,
on
buddy.
your talk, but
No,
I do have to mention.
Professor. Go ahead.
Yeah, I just wanted to mention as well. This offer only comes around a couple of times a year. So if you guys like what we do, like Dale said, if you like what we do, and you think you help us, this is the way you could support us, because we have a team, and we have a team that works tirelessly for ForexAnalytix. So in order to support us, become a member, and if you like what we do, come support us. It'd be great.
Help us help you, Jerry Maguire.
That's Jerry Maguire, isn't it?
Yeah. Great line.
I actually
help me help you. Help me help you.
I showed my kids that movie, and they hated Jerry Maguire for how he treated
the girl.
The girl, yeah.
Renee Zellweger.
Yeah, exactly.
Yeah.
Dorothy Boyd. Come on, you have to remember the name.
What's that?
Dorothy Boyd was her name.
I never would have remembered
Come
that.
on.
So, really? Anyway,
I don't. I'm not really good at remember those things, but I'll tell you what.
Go ahead, man.
It's funny. My kids have like the highest moral standards, and if my
respect for women.
Oh,
they learn who do you think they learned that from?
If they see like they see somebody on a TV show or something that or some sort of we'll watch a movie, and if the man is mistreating or cheating on his wife or girlfriend, the hatred that spews from my kid's mouth it's funny. Yeah, it's quite humorous. Anyway,
you created good monsters.
Yeah,
they're nice monsters.
Stelios. It's Stelios, I know your daughters are single. My boys are single. I'm just kidding.
Hey, we'll figure it out.
joking.
Be like the old day.
Anyway, I know they're in Greece. My kids are in Arizona. It's all right. Anyway, joking. Hey, we have non-farm payroll today.
Yeah.
It's going to be it's kind of exciting because of what's happening. Not this week. I mean, Oh, wow. London mayor declares major incident over high COVID cases. Well, okay.
Yeah, they don't want to stay
Is
inside.
that like new news to anybody? I don't know if that's new news to anybody, but that's just came out on Bloomberg. But I want to say that what's developing in the markets is what's really important going into non-farm payroll. And I'm going to talk about that. And I want to be quick about it because I have to go trade non-farm payroll. So I'm going to pass it over to the guys ahead of this. This is the first one of the year. I've got to be, locked in, loaded in front of my computer. Well, I am in front of my computer, but really focused on price action. But if you guys thought I was referring to the things that were happening this week in the United States, that's not really market wise. It's not really so important. To us personally, it might be important, but to the market, really, the market looks past all that. What's really important in the market right now is, we have high COVID cases. We have possible stimulus coming from, the Biden administration, big stimulus, and also big taxes as well. And we got pretty lofty prices in assets. And, we've got to be very careful here. We got Bitcoin rallying to past 40,000. I think it just hit a new high this morning. And also Ethereum. I mean, Bitcoin's 41,000 new highs. Ethereum was hit the 88% retracement, dropped 16% last night, and then came all the way back. Wow. Good luck trading that. I mean, if you're out there trading it, hopefully you're just doing it in cash. You can't do it in margin because that's crazy. Right?
Yep.
I mean, the amount of money you could make or lose is staggering. So you got to be doing that,
or give up going to the bathroom.
Huh?
Give up going to the bathroom.
Yeah.
You have to be glued to the screen every second.
Seriously. Yeah, no joke. All right. But anyway, let's talk about what major is happening in the markets. So the major thing that's happening in the markets right now is look at the euro. It's broken. It's broken the trend line. Now, does that mean you should short right now? I mean, you can, but if you're more conservative, especially you're following you're following a big major uptrend. The conservative approach is waiting till non-farm payroll, because if you break through, like here's where like the I want to say sure trade, but this is where easier money is going to be made, is below these lows, because that's horizontal support down to 161% extension. If you want to be a little you got a little more of a stomach, you sell here up against the underside of this trend line, knowing that we've broken the uptrend. So, but the reason why this is important is because it's happening ahead of the non-farm payroll numbers. So keeping that in mind, that the dollar is already showing some signs of strength, that is signaling the market's expecting a stronger number, or potentially there's going to be some risk off. And I could probably throw some evidence around that might suggest that risk off may be coming, but it's not here right now. And it's
what's interesting, Blake, is everyone thought the dollar would rally if we got risk off, and the dollar rallied and we didn't get risk off yet.
Yeah, but let me be very clear about something. And COVID lockdown was not a good example of this. You have to look at previous examples of the dollar and sell-offs and rallies and risk aversion. And you guys that have been listening to me for a long time you've heard me say this, so I'll just say it. The dollar really only rallies on risk off if it's a severe sharp move. Other than that, it may grind higher against like some of the more growth sensitive currencies, like commodity currencies. The dollar might grind higher against the Aussie or the Kiwi or the Canadian or the emerging market currencies like the Mexican peso. But during normal periods of risk off, don't expect the dollar to really strengthen. We might see the dollar strengthen a little bit, but it's not like you'll see it explode. You might see you know, a big move down in the S&P, or what you might consider a big move down. It would be like maybe something like this. I'm just gonna, you know, use this as an example. Like you see this little sell-off right here. If you matched up the dollar to that, the dollar may have strengthened a little bit, but not a lot. Let me go to compare, and then I got to really get to the charts here. So I'm gonna. Didn't I just do that? All right, I've really got to get started, but you can see the dollar was dropping. Yeah, stocks came off, dollar came up a little bit, and then just resumed its downtrend. You're not going to see the dollar really reverse for, well, there's a lot of reasons why it's not going to reverse right now, but you won't see it like for it to move really aggressively. We do have to see a pretty steep sell-off. Now the S&P is at the channel highs, and we talked about this being resistance here. That's at 38.25. I got to put this down on the bias chart. 38.25 support intraday. Well, 37.85. And we're in a bullish trend. Let me see if I can do this quickly. I'm not sure I'm going to be able to finish everything. Let's see. All right, so support for the euro dollar, 122.10, resistance 122.80 now. This is horizontal support. So, and this is going to be the first day in a long time that I come out of a bullish trend. It's going to range. I know you guys are probably like, what? Yeah, I mean, 135 is the 38% retracement in the cable. 137 is resistance. So now that doesn't mean that we won't go back to bullish the euro even as early as, you know, Monday. Because if this ends up being just like a false breakdown, and, you know, by the end of the day we're back at 123, which could very easily happen in this uptrend, then we'll be back at bullish tomorrow. But right now it's range, and this is 135. Why it's important? It's a 38% retracement. Aussie support key, also 50% retracement, 77.30. Resistance 78 cents, which I know we've been a little higher, but I think I even said yesterday 78 cents, if I'm not mistaken. 78 cents. Kiwi resistance 73 cents, but it is actually 72.75. Support is going to be right here at 72.20. We are still bullish here. Sorry, I need to fix these. We're still bullish in the Kiwi. Why? Because they're solid uptrends for now. Dollar Canadian. Yep. Dollar Canadian. Descending wedge. Resistance 127.30. Hey, Stelios. You know what? It slipped my mind. Or I don't. Maybe Coach.
Yes, sir.
Do we have Canadian jobs? Yeah, we do have Canadian jobs today, don't we?
We do, yes.
Okay, so that's important, because 127.35 here could be broken today, and we are range bound here, as you guys know. I played this on the upside yesterday too, and it went nowhere. I forgot. I just kind of bought it, and I was like, again, that was like day two that I've tried to play this thing and really just hadn't gone anywhere. 126.60. Dollar Swiss, or a dollar Mexican peso. I don't know if you guys were long with me yesterday. Did anybody here get long this yesterday? If you want to know where my exit was, $20.05. So, you know, if you guys were in the chat rooms, or ForexAnalytix subscribers when that PIP came out yesterday, it was right here. Okay. And all my reasoning is in the charts or in the description. So again, you know, be part of ForexAnalytix. This is where you find, you know, some opportunities. Now, I made the case for why I'm bullish this, and so we're going to look at support as being 1990. I don't have time to go over it today because you guys should have got that yesterday. Resistance is, oops, 2010. We are in a range. Okay. Swissy broke the trend line. Okay. Last night, you know, we made the point for you guys to understand that we did break the trend line. So now 88.25 is going to be support, and 89.20 is going to be resistance. So what did I say? 88.25, 89.25. I actually think that I mean, I know the euros come out of range. The Swissy, I think, or has come out of a bullish trend. The Swissy is the same way right now, but think about the overall trends are still pretty bearish here, or in this case, dollar bearish, and same with the euro, still very bullish. It's just, you know, here for the, you know, very near future, we might be range bound. So that's why I'm flipping on some of these. US dollar, Norwegian krona, still bearish. Yeah, I mean, we got slammed. Citigroup actually just put out a note the last 2 days that they're selling more US dollar, Norwegian krona. They actually sold pound Norwegian krona today. So the cable, the sterling Noki, and you know, they're very bullish the Norwegian krona, a lot like Steve Vogie. So so he's got good company. All right, resistance today, 847, support, 837. What did I say? 47, 48, 48, 47. This is still a very bearish trend. Dollar yen. Well, Dale already went over this with you, but look, 104 is key, period. I'm going to 104.10, support at 103.50. And that's significant because if that breaks, we go bullish. Dollar index. Dollar index, we went, we broke the downtrend line. So now dips down to 89.60, should find support. Next resistance for the dollar index is 90.50. And for those of you guys that are, you know, part of the ForexAnalytix community in the chat rooms, if you have any questions, just ask me. I'm sorry, I'm going through this rather quickly. If you guys are, you know, not, and you're just watching the webinar, I apologize. I really have to trade non-farm payroll today. It's the first non-farm payroll of the month, and I need to be there and be present, ever present. Gold broke. So now 1900 is resistance, support, 1875. You guys all knew this was coming. This is the chart of the day yesterday. So 1900. Support now, 50% retracement is at 1865. We could reach, oh, wait, that's not true. That's not true. I take that back because that was previous fib. Sorry, that was going the opposite direction. So now 38%, 50% retracement is 1860. So that's gonna be our next support.
Record amount of time. Good job.
Thank you.
We'll make millions now.
Wait, Stelios, I didn't get what you said. I'm sorry. I just saw your conversation, but I didn't.
Oh, have you finished the bias chart?
Oh yeah, I'm fine. I'm finished.
Oh,
You
you
see,
finished?
he's not even paying attention.
Wow,
This
no.
guy. Why do we keep him
I
around?
thought you might not have time to finish it. Good.
No, I'm done. I'm done. I was like,
Fantastic.
what? I sorry. I just saw your message. I was like kind of confused. Good morning, Steve. How are you?
Good morning, Blake. I'm good. How have you
All
been?
right. Yeah, and I'm gonna say again, if you guys, I blew through those. If you're, if you listen to us throughout the week, oh shoot, I should do this. Hold on, live NFP coverage of the Forex market with Ed Volgi and oh crap! I was gonna anyway. I'm gonna tweet this out, and I can only do I can only talk. I can't talk and type. It's like talking and
Chewing gum.
And chewing gum and walking at the same time.
That's all right, Blake. We got it. Don't worry.
All right. So anyway, I wanted to tweet that. I want to say thank you all for your support and good luck today. I usually don't breeze through the bias chart so quickly, but I did today because I wanted to make sure I got you all the levels before I had to take off. But I want to thank you all for your continued support and good luck today. And Steve,
Blake.
Stelios, Coach, it's all you. And hey guys, if you're listening in, do me a favor. If you just saw that tweet about the non-farm payrolls, retweet that, will you? That'd be great. Appreciate it.
Blake,
Thanks everyone.
by the way, before you go, you mentioned pound knock. Just have a look at this.
Okay. Yeah, it's a big one. All right, man. Gotta go.
Bye-bye, mate.
Thank
Bye.
you, Blake. Thank you. So,
Hi,
payrolls
guys.
in 2 minutes. Hey, Dale, how you doing?
Good.
Thank God it's
Okay.
Friday.
Yeah.
Indeed.
Yes. So we got payrolls in 2 minutes, but we can discuss a couple of things before then. Obviously, the main thing happening now is Donald Trump seems to be willing to pass on power peacefully. So that's good. And so I think it's, 2 weeks left or something like that?
12 days.
Sorry, 12 days, yeah. So I think from what he's said and tweeted and all that, he's been relatively quiet and calm, which is good. And I guess that's what the market has been looking at anyway. They're looking through all the noise and the unfortunate event that happened a couple of days ago. They're looking at Joe Biden coming in and, doing what he wants to do going forward. And there was somebody who was saying the other day, oh, yeah, but you know what the Democrats do? They're very good at spending, and this is probably not going to be good for the dollar and all that. I said, well, I think Democrats, Republicans, they're all spending now. I don't think there's any major difference between them. But the main thing is to have a peaceful transition and then see how Biden's plans pan out and, first 100 days and all that stuff.
Yes, in my opinion, we should just stop paying attention to all the rhetoric. I remind you that we've changed during the past few months rhetoric multiple times, and every time it's just to, I'm talking about the media now and the consensus, right? And every time it's just to fit, whatever is actually happening. I remind you that just a few weeks ago, when it seemed the most likely scenario would be that yes, the Democrats did get the White House, but they would not get the Senate. The market thought that's an amazingly positive development because the Democrats would push for more stimulus, but at the same time, Republicans controlling the Senate would put a brake at potential attempts to reverse tax cuts. Now, that's gone out of the window, and once again, it's positive for another reason. You know what I mean?
Let's see the numbers.
Yeah, I know. NFPs, here we go.
Okay. Canadian employment is bad. NFP is negative 140, so they're both bad.
Yeah.
Average hourly earnings, big jump.
Unemployment rate, despite that dropping, I'm assuming that has to do once again with labor participation.
Where is that?
Unemployment rate fell to 6.7 from 6.8 expected.
Participation rate was flat. So weird. Sometimes the maths doesn't work out. I don't know how they come up with it, but anyway. So the numbers.
NFP is quite a big miss. I mean, more than 200,000 less than the market expected. Look at payrolls, actually, Stelio. US average hourly earnings up 4 times than expected, and US manufacturing payrolls almost double of what was expected.
Actually, you know what? Look at the revision. The revision on from last month is basically the difference, or almost the difference of the headline number. So maybe that's why the market is not doing that much.
I think the market is not doing that much because the market doesn't care about data.
Yeah, but eventually we'll have to. But you're right. Yes, you're right. So headline number was about 200K off, and the revision was about 100K the other way. So yeah, makes up for a little bit of that. Okay.
And for the time being, I don't see any real reaction. Yeah, I mean, yeah, we got the data.
Apart from Tesla rallying.
Yeah, but that's not dependent on payrolls. It's just because we're in a day that ends with Y.
Yeah, exactly.
Dollar actually is getting a bid on a weak number.
Yeah.
I mean, Dale, depends on what kind of chart you're looking at. I mean, if you're looking at the tick chart.
1 millisecond. No, actually, 15-minute I'm looking at,
Yeah, it's, these time frames I've stopped looking. I don't even remember how many years ago. I mean, many, probably a decade ago or something. Might be even more. So far the market couldn't care less. I mean, if we didn't know we had payrolls, we wouldn't really, assume that was the case. Okay, let's give it a few more minutes. So let's go back to what we were talking about, and of course we will keep monitoring. If there is some kind of a little bit post-delayed reaction to the NFP. So far, I see the dollar weakening actually, but I mean marginally, so nothing to talk.
10-15 pips don't count.
No, they don't really count indeed. So what I was saying, Stelio, is that just people should stop paying attention to any of the rhetoric because it keeps changing just to shift the price action, right? I mean, blue wave was a positive thing. Then the market thought that blue wave would have been a negative thing because of tax hikes in corporations and individuals. Then now that we got the blue wave, in essence, with a little bit of a delay, having Georgia elect 2 Democrat senators, now it's again positive. I mean, yeah, whatever. You know what I mean?
Yeah.
Whatever. Yeah. Bottom line, the market doesn't care about politics, doesn't care about politicians, doesn't care about the Biden government having promised to increase taxes. Of course, somebody's going to say, but taxes erode earnings. I mean, they reduce earnings. But the market is not trading on earnings anymore. The market will only care about earnings when earnings are actually going up. If they're not going up, it's okay. It's just multiple expansion. We have names for everything. So this is a pure trade of extreme monetary policy mania, and everybody chasing the same momentum names mindlessly, and everybody hoping that they're going to be lucky enough to have made enough money when the music stops, and we have to start counting how many musical chairs we have and how many people will be left standing. So it is what it is. And as I've said before, having done all this analysis, you shouldn't be trying to fade this. It's extremely dangerous, right? I mean, from a personal perspective, I'm not trying to join this because, I can't allow myself to do this because it's pure stupidity in my mind. But I know very well that it's extremely dangerous and it can continue for, much longer. So depends on your time frame. Of course, if you're a day trader, you don't care about any of that. You just look at the daily price action on short-term trends, on short-term time frames, and you go with the daily trend. That's it.
Yeah. And you have so many names doing so well in equities that FOMO is real for so many people. I have friends who are saying, look, all these things, and not only equities, cryptos and everything. Oh, come on, there's so many things that are going 50% in 3 days and this and that. We have to do something. We have to get in. And you see people just joining the party just because they feel they have to. And that's
and as always, exactly as it was happening in 99, 2000, there is always a narrative to back why this is different. You know what I mean? Why this is not going to be a bubble that's going to blow up because A, B, C, D, E. Because that's what always the media do, right? They try to find excuses why this time is different. It's not going to be different, but as I said, not part of not being different also means that it can, last more than you can stay solvent just by trying to fundamentally be short this market, because it doesn't make any sense. Yeah, it doesn't make any sense, but it can remain not making much sense for, much longer. Now, having to do with other market developments, we had a nice dump lower in the metals today. Here is gold, here is silver. In the case of gold, technically you can say that it looks a little bit worrying that it is attempting to go back within the channel. Of course, it's very early on the day, and for me, the daily candle doesn't tell me much until I actually see it close.
Yeah.
In the case of silver,
it would be a worrying break, though, a false break.
Yes. It would be. Also, I mentioned the other day that, we were indeed backtesting the confluence of the 61.8 and the previous high, right? So that rejection came from an interesting level, admittedly. So who knows? We might have a more complex correction that needs to unfold here. That can always be the case. I mean, I've mentioned multiple times that the problem with corrective moves is that it's extremely hard to predict in advance how they are. I mean, this looked like a nice legitimate channel, but let's say, who knows? There is a chance that we have, let's say, something like this, and we might have more complex correction before we break higher. What does not change is the fact that I very, very strongly believe that whatever form this move takes, it is corrective.
Yes, I agree with that.
And even if we push to new lows within the context of, this big correction consolidation, my bias doesn't change. I want to be buyer of weakness and not a seller of strength, both in gold and in silver. Silver, by the way, totally different story here in silver, because silver is still decently far away from the breakout area, right? So this is an interesting divergence to monitor. Copper,
silver. Let me just say a couple of things about silver, because a friend was asking. I've said for a while now I want a weekly close above 26.50, and that's, I looked at my charts. I thought the breakout point was around 26, and what I always do, I try to give it some space and some some breathing space, and I want the weekly close because that makes it a bit more real in my opinion. The problem is now, because of this price action today, even if we close above 26.50, we close 26.52 or 55, something like that, I'm still going to wait, because this price action scares me a little bit. And I don't think we're going to miss much by giving it a little bit more. It's 26.40 now, so it's well below. It is below. But I'm not, I had said this as a rule to myself, but now looking at today's price action, I'm going to wait. Even if we do close marginally above, and then I'm going to consider based on price action.
I don't really disagree with you, although I have to say it's a little bit scary, because usually it's not a good idea, thinking like this.
Yeah.
But personally, if somebody forced me to buy silver here, I wouldn't give it a second thought. I would sleep just fine at night. You know what I mean?
Yeah. And I want to have a long bias for sure. Always have a long bias on this.
Yeah, I mean long term. And when I say long term, I'm not talking like decades ago, right? I mean decades in the future.
Yeah.
I think silver is going to be above 50.
I
mean, in the
agree.
grand scheme of things, even if I had to buy it 26, can it go lower, like towards 20? Yeah, it can. But would I really be thinking, oh my God, I, threw my money away and, no way. I mean, I would be
Absolutely
like,
not.
keep that on the side. One day in the not so distant future, you're going to make a lot of money out of it.
Yeah, and as I said in the chat room, I'm going to start buying slowly. A third the position here, a third the position there. I'm just going to start building. And if I build upwards, great. If I build, getting some a little bit lower, even better. So that's what I'm going to start doing. But I haven't done anything yet. I'm still watching.
Something else I wanted to mention, because in his introduction, Dale made a mention about Peter. I'm talking about Peter Goodman that we had yesterday. And him mentioning, did you say, Dale, that he mentioned that he thinks we're topping here in copper in the short term? Mm-hmm. Was that a short-term call or a longer-term call?
Just pretty much across the board corrections and then continuations.
Okay. So I'm on board with him. Just look at this. I mean, I'm on board in what sense? There is a chance that we can find a short-term high here. Other than the fact that we're obviously extremely oversold, don't forget that within a few months we've gone from 190 to 370. Other than the fact that we have RSI divergence, which is an indication, but a weak indication on its own, and I've explained multiple times why. We're now testing the confluence of this ascending wedge and the 127% extension of the last bearish move lower in copper. And when I say last, I deep down believe it was the last one. I mean, not only the last one in the sense that it was, the one that we had previously. I think there is a good chance we're not going to be testing those levels again, perhaps even ever.
Where?
Down at
those lows?
Below. Yeah. I do see the potential of finding some kind of interim high here. Now, would I be shorting just because we are at the confluence of resistances? No. But if we do see a nice reversal candle up here, I will consider it a rather reliable indication. Now, also keep in mind that copper, and we mentioned that a few days ago, the recent price action looked very, very similar with how the S&P and the Nasdaq looked. S&P has already broken higher from there, and the Nasdaq is attempting to do so now. Can that be an overthrow? Yes, it can. But, if it is for us to have a reversal here in risk assets, it has to be fast. It has to be imminently, right? And so far, we've had several minutes, like 15 minutes post NFPs, and the market doesn't seem to really try to reverse direction. So in essence, doesn't really show that it really minds the fact that we had weak NFPs. It's not surprising to me. I said the same yesterday. I don't think the market really cares about data anymore. It just cares about, the path forward.
Momentum.
The path forward having to do with stimulus, momentum, and just things that can interrupt that kind of euphoric sentiment that we see broadening in the market. And speaking of which, I also don't consider it a coincidence that the DXY seems to be finding it hard, to be struggling to break through the resistance of this descending channel. So bottom line, as long as the DXY is not playing ball here, and as long as the formations we've shown on risk assets are not really cracking, I'm going to reiterate what I've been saying for weeks and weeks now. Don't try to take the other side of the market. It's quite dangerous. In this type of a market environment, there is a very, very good chance that we're going to get a blow-off move to the upside, right? So you don't want
So
to be in the
far,
other
so
side.
good.
Yeah, you don't want to be in the other side of the market, right? Because blow-off moves are really vertical moves. I mean, they're the type of moves that won't give you the ability to get out with a smaller loss, because a lot of people just, go short, and then they're like, it's overdone. It should pull back, and then it starts accelerating higher, and they're like, yeah, okay, I was wrong in my assumption, but it should at least pull back to the level that I entered, so I can, exit at break even. And then, they keep hoping for something different. And in blow off moves, you don't get the type of pullbacks that give you the ability to leave the market unscathed, or at least, with, less financial damage than at some point you're, into. I mean, you just keep digging a bigger hole for yourself. Anyhow, let me go through some of your questions and see if we have anything else we need to. Crude oil. Speaking of which, so crude oil just remains very well bid, right? You can see it here. It's even now testing the ascending channel trend line resistance. Really, I mean, no indication that you should be fading it. I mean, it remains very, very strong. Natural gas, on the other hand, hasn't managed yet, to break through this channel and accelerate. So, I'm still monitoring this, but it's not joining the party yet. Platinum, doing its thing. Palladium, not having broken out yet. I'd like to know if this is also part of the ForexAnalytix Lite version. Which part are you referring to? On the contrary, weak NFP more equals more stimulus. Yeah, I mean, the market has the tendency to think about it like that. When the environment is really supportive, the market just thinks, okay, as long as the economy is weak, and especially now that we have like Democrats controlling everything, we're going to get stimulus in all kinds of forms, infrastructure spending, more monetary easing, because don't fool yourselves. I hope there's none of you that really believes that there is any type of independence between central banks and governments, right? And I'm not only referring in the case of the US at the moment. They don't even try to keep the pretenses anymore. They don't even attempt to keep the pretenses. I mean, Yellen is going to be the Secretary of the Treasury now. Since time ago, they've openly been talking on the phone. I'm talking about now the Federal Reserve and the Treasury. Theoretically speaking, that should never be happening. So, there is not even the pretense that, there is a separate independent authority that just is there to make sure that, money supply and financial stability is what should be done, is what it should be. Anyhow, what they're doing is the opposite of financial stability. They're creating tons and tons of moral hazard and making the market more and more dependent and fragile. Let me see. Platinum, Palladium, we covered that. Bitcoin over 40K. Yeah, I mean, sky's the limit, right? As I've said before, we knew that Bitcoin is really bullish when it broke through there. And as you see, the move is now completely parabolic. At some point, we're going to get a correction. Who knows when that is? The move is completely parabolic. It makes no sense. Any price makes the same sense, actually, I should say. Any price makes the same sense. There is no way to have some type of a fundamental analysis and say, this is a price that makes sense, but this is a price that doesn't make any sense. It can be whatever. right? Bitcoin has no intrinsic value. It's not a store of value because there is no value to store. It's just based now on supply and demand, right? People want to buy Bitcoin because they believe that it's going to go higher, and they believe there are going to be people buying it off their hands at a higher price, and that's it. Everybody else that is trying to produce 100-page long PowerPoints trying to explain to you fundamentally why you're stupid for not understanding and realizing why fair value is at 100,000, 1 million, 50,000, and I've seen different prices ranging from the thousands to the millions. Is just playing a joke at you, right? The price can be anything because it makes the same sense. Having said that, you have to respect the fact that it's a parabolic move, which how the hell are you going to fade it? I mean, who tells you that it's not going to go to 50K, to 60K before it moves lower? What I can tell you as a fact is that at some point it's going to have a very, very, very sharp pullback. And as always, that type of a pullback is going to really rape the weak hands, the retail crowd that's going to be leveraging their credit cards once again to buy Bitcoin, because they're going to be, seeing in the media that 40K Bitcoin is nothing, because in a couple of weeks from now, it can be at 80K. And it might actually go to 80K, but it might first go back to 20K, even for a couple of days, right? And these people are going to be wiped out once again, as they were at the end of 2017. Do we have an interview today, by the way, Dale?
Possibly.
What does that mean?
It's always possibly, isn't it? I have Charlie Gasparino scheduled.
Okay. Okay,
Oh, wow.
nice.
So
Okay.
he's not in the house yet. So that's why I said possibly.
Yeah, but okay, it's still like 8
It was
minutes.
scheduled. Yeah.
Okay.
8-10
So
minutes before.
there you go. You
I
have
start by, huh?
you have 8 minutes. That includes everybody to throw. What do you see
Questions?
for JPY? Yeah, there is already one question actually. What do I see for USDM? I'm looking at this formation, the one you see in blue. We found support here. Listen, personally, I will not get enthusiastic about the potential upside for USD yen as long as USD yen is trading below 105.50. Okay, so nice support here, nice rebound so far, but I'm not going to be taking the bait. I know that a lot of people have taken the bait at some of the short-lived but sharp moves that the USD yen has produced during the past many months. I've refrained from doing so, and I feel very glad about it, because you can see that in essence there is no trend here. So if you want my opinion, support is at where we did find support, a little bit above 102.50, and resistance at 105.50. Anything in between, in my mind, is just noise. So, personally, I wouldn't be doing anything with it. Let me see. TGIF from Kenya. Nice Friday to you as well. DAX, SPY, IWM. Okay, so we already had a look at the S&Ps. The S&Ps have now tagged the 161.8% FIB extension from this corrective move lower. The next upside is almost at 4K, right? Pay attention to this 37.50 as support from this point on. And in order for me to turn bearish here, I would definitely need to see a break below 3,700, 3,690 to be exact. As long as we're trading above that, why would you try to fade it? Now, having to do with IWM has had a massive move higher. At some point, it looked like this looked like a beautiful ascending wedge. because it also had a very nice inclination. So to be honest, when I did see the breakdown from this wedge, I thought there is a very good chance we're going to see a deeper recovery, probably back towards the beginning of the wedge, which was also the previous high here at 170. But the way the correction unfolded was, clearly exceptionally corrective. And look at it now, accelerating up once again. The next upside resistance is the 161.8% extension of the COVID move lower, which comes at 217. And, as I said before, too strong to fade. Now, somebody might notice that the VIX and the VXN, both of them, one is the volatility index for the S&P, the other one is the volatility index for the Nasdaq. They're
What's
both
happening with your cats? Are they dying or something?
She's she's just very, very lazy, and she doesn't want to go around the other side of the house.
Oh yeah.
She wants me to open the door for her, and she's like, in essence, she's blackmailing me by by shouting louder and louder. You know how it is. So they're both diverging, right? So, is that enough? No, it's not on its own. Just keep that in mind. And here is also the Fang Stocks. Some kind of a consolidation here. So far, it looks bullish to me. I don't really see anything bearish here. And I'm showing this because we know how important the Fangs have been in most of the time propelling the markets higher. DAX, yeah, we also had a question about the DAX. So here's the DAX at all-time highs, breaking through this expansive formation, testing the 127% extension of the last corrective move lower, the next upside at 14,800. Listen, there is nothing really bearish here. I mean, not as long as we trade above like 13,500. Everything is overdone, and I'm going to have to more or less summarize in the same way I started, but with much fewer words. Everything is too overbought to buy it and too stupidly priced to buy it, but at the same time, trying to fade it can be really, really bad for your trading account. So if you've been long, you can just keep trailing your stops and hope that this move just extends as much as it can. If you have not been long, I think that buying into the FOMO is not a good idea at all. So do what you believe is best. Dale, any news from your guest?
Not yet, Steve. I sent him a message on Twitter. But before, or if he gets here, what's your understanding of what everyone's talking about, the Great Reset, World Economic Forum?
I'm not sure exactly about what reset we're talking about, because having to do with economics, there's been talk about many type of resets, like a monetary reset, a debt.
I mean, it's popular
reset.
Everywhere. People are talking, whatever people are talking about. I don't know if it's, conspiracy theories but everyone keeps talking. I even hear my neighbors talking about it. The Great Reset. It includes China. I'm just wondering if either you or Stell have heard what people are reading and concerned about or happy about. What the hell is it? Oh, there's Charlie.
Oh, okay. I can just tell you that the path we've been following and accelerating towards that direction is definitely unsustainable. Nobody can put an end date to it, but the monetary system as it is at the moment, and the whole charade that what we've known for decades, deficits, debts, and all that matters, now suddenly there is almost a consensus that, oh, that's like old school stuff. None of that matters, right? We
Yeah.
can keep on living on money created out of thin air while production remains the same, or in some cases even going lower. Inflation is never going to be a problem because that was something like a disease that we found the vaccine for, and now we've been permanently vaccinated from, and that's it. You can forget about it, right?
Yeah.
I think all that is going to prove once again, as in every occasion that we've had this type of thinking in the past, to be BS, and it's going to end really, really badly. And usually, these type of resets, since you like to use the word, also include quite a lot of social unrest and violence.
Okay. Well, that started too. All right. So thank you, Steve. I mean, everyone, there's a lot of awareness about it. Charlie, welcome to FACE. I'm going to get you set up so we could have a little conversation here. I've been looking forward to this. So I'm going to promote you to being a panelist. And I'm not sure if you want to use your video camera or not.
You're talking to the least technologically adept.
All
I can
right,
see you.
Charlie.
Can you see me?
No. Do you have a? There's a thing called.
If you click start video. If you click start video.
And see, maybe you can make this full screen. I'm not going to show charts during this, so.
Share screen, start video.
Start video.
We're in.
There you are. Hey, Charlie, it's a pleasure to meet you.
Thank you. Thanks for having me.
Really nice to meet you. I've been following your work for a long time, and I really like the fact that you say what you mean and mean what you say. And I'm interested in talking about what's going on in the country right now and what your sources may be telling you. But I'd like to start with maybe a little time machine trip back in high school, college. What were your aspirations, and how did you end up becoming both a broadcast and print journalist?
Well, it's funny you say that, because my brother and I are kind of the first people in our family to graduate from real high school. My parents went to vocational schools. I think my mother dropped out when she was 16 to be a secretary. My dad was went to something called Samuel Gompers High School in the South Bronx. It's a vocational school. Either one went to college. He went to the Marines after high school. My mom was a secretary. And the last thing they wanted me to be was a journalist. They wanted me to be a lawyer. They wanted my brother kind of to be a doctor. My brother became a doctor, by the way.
Sounds like my family. Is it that a lot of ethnics? I was brought up in. My mother was bar mitzvahed at 13, and for me to go to the floor at the CME and be a runner wasn't my mother's dream for me. After I went to college, she would say, "Honey, get a real job."
My parents would have liked that, because it was Wall Street. You could make a lot of money,
Yeah.
The journalism thing just did not turn on. And my dad was a huge Richard Nixon supporter, and he was like part of that blue collar stuff that you see now following Donald Trump. Although my dad was also, listen, he was a self-educated guy. He read a lot, and he read 3 papers a day. He read the Times, he read books, and that's how I kind of got into journalism, just seeing what he read and I read. I initially wanted to be a sports writer, but then I got into politics and finance. And what I did was I took as an undergrad studying journalism, I took an elementary economics class, and I really liked it. Wasn't particularly good at it, but I was intrigued by it. And I kept taking more. When I went to graduate school, I took a bunch at the University of Missouri, which is a very good journalism school.
Yes.
I took a bunch of econ classes. I earned, like, in graduate school, between graduate and undergrad, the equivalent of minor in econ, because I took so much econ as a graduate student. And this was a lot of it was upper level undergraduate econ, where I would have to make up for my gaps in math knowledge, which, I didn't take math for a long time, with, being able to conceptualize stuff about currency flows, about the banking system, about how to create money. And I figured at that point, I really wanted to write about economics, finance, and also I was interested in politics and the confluence of it. And that's kind of like what I did through my career. I was a general assignment reporter. My first job, I did a bunch of internships. I did a internship with a guy who's deceased, dead. His name is Bob Green. He ran the investigative team at Newsday. He was a high profile corporate and government investigator. He won 2 Pulitzers. I was an intern for him. He was kind of a role model for me on one end. There's another guy at the University of Missouri named James Gentry, professor, who was another role model, who schooled me in how to cover business journalism, and that's what I did. And as I got on in my career, I covered the confluence of business and business, finance, and politics. I spent some time at something called the Bond Buyer, where I covered essentially the confluence of Wall Street and government. I went to New York Newsday, did that there. I went to the Journal, spent a chunk of time there.
Was CNBC your big breakout?
Well, what happened
for your career?
Well, I wouldn't say that. It was more the Journal. I mean, the Journal taught me the basics of journalism. They put me up for a bunch of prizes, Pulitzers. Won some, didn't win the Pulitzer, unfortunately. What happened was I left the Journal to go to Newsweek. This is before Newsweek. Newsweek's a shell of itself. This is when it was a real magazine, and it was run by serious people. And I was there about 18 months, not quite 2 years. And I remember the first 9 months were really good. The second 9 months, I saw the magazine business collapse. At that point, I was doing more business, more TV. CNBC had me on a lot when I was at the Journal. They would have me on then. I did a bunch of MSNBC before it became very political. I covered the Martha Stewart trial when I was working at the Journal for MSNBC for Dan Abrams, who had a nightly show mostly about law, and it wasn't the sort of political stuff you see now. Then CNBC called me, and I just said, okay, do I stay with journalism, print, or do I do this? Do I make print part of this? And that's kind of what I did. What I tried to do at CNBC, even though it was very difficult at first, I sucked on TV, and it was hard. It was hard. I had to get up early. I mean, I hated it at first. What I tried to do, though, is remake my career in the sense that, okay, you have to do TV. You have to know. And TV now is what you're doing now as well. Remember, it's a huge difference, but that trained me for what the medium has changed into now. I said, I'm never going to give up my day job of writing. I'm still going to keep breaking stories, but I'm going to do TV and get into the confluence of it all. And that's what I learned at CNBC. I got lucky. I got there a year before the financial crisis. And then when the financial crisis came, the financial crisis was perfect for me because I was training my entire career to cover it. I had the sources. I had the Wall Street sources. I had the Washington sources from all my years covering it at the Journal and Newsweek. And it was like breaking those stories was like a 80-mile-an-hour fastball down the middle of the plate. And I broke the TARP story. I broke AIG's bailout. I broke a lot of stuff on Lehman and Bear. It was all right there for me because I had the sources developed. And I was there 4.5, 5 years. And, I liked CNBC a lot. Okay. Right. But Roger Ailes came calling. And and I had an out in my contract, and they had a management change. There was a guy running. My old boss, Jonathan Wald, had left. I was very close to him. They had brought a new guy in. Not going to get into the. He was the guy was in my view wasn't very good. He didn't last there very long after I left, by the way. But when he came in, I wanted out, and I was like, do I work for this guy? I worked for Roger Ailes, and it was like a no-brainer. And I exercised, which was essentially a joint option in the contract. They kind of had to agree with it, but not. And we left very well. I mean, the guy who runs CNBC at the top is a very good guy, Mark Hoffman. And we left on good terms. I'm still friends with him. I'm still friends with 90% of the people there, but they are competitors, and I'm very competitive with them.
Okay. And
I went to Fox Business.
Yeah, so being competitive, and I've been watching a lot of your stories, and your background with the economy, and you say, you know, you were prepping for the financial crisis. No way to prep unless you're over 100 years old for what's happening here with COVID, Charlie.
I know.
You know, what kind did you have to develop a whole new source of people, you know, epidemiologists, and or you just, it's something that you don't cover, but it sure has its reach all the way
Well,
through.
Well, here's the thing, Dale. One of the good things about covering Wall Street, and when I say Wall Street, hedge funds, sophisticated investors, is that they have money and they have access to a lot of good information. And you know, I have access to a lot of good hedge funds. The guys that
Right.
run them, they are tapped into epidemiologists and everybody. One thing I will tell you about COVID is that you know, no one. You know, the access to information is pretty much what you see is what you get. There's no secrets out there about this. I should point out that my brother, you know, it's almost like I don't have to tap into an epidemiologist to know what's going on. My brother is an ICU specialist. He's the chairman of medicine at Brooklyn Hospital. He's got an MD from SUNY Stony Brook in several disciplines. He's got a PhD in chemistry from Columbia. And if you talk to any epidemiologist, they would say the frontline workers, the Green Berets of
Right.
the COVID crisis, are the people in critical care and in ICUs, which my brother is an expert at critical care. So I knew a lot what was going on on this thing, even before it hit. I knew that it was serious. I knew that anybody that was downplaying it was idiotic. I also knew, because I have an economic background, that the notion that you could just shut everything down and hibernate away the thing was absurd. That, you know, we needed to open up in a smart way. I'm very critical of Governor Cuomo and Bill de Blasio, what they're doing to New York City and New York State. I'm of the opinion, and this is based on like not being a denier, that you protect people that have sickness. You're going to have outliers, like 40-year-old people that look healthy die. It's just the way it goes. It happens with
Everything.
with flu and everything.
Yeah, everything.
Most people have to live their lives within reason, and because you just can't shut down society, or else you're going to get what we're having now, which is this nonstop unrest. And I think part of the problem is, I'm not going to excuse Donald Trump for what he did. I'm not going to excuse the Democrats for acquiescing to the violence over the summer, which is what they did. But part of the reason why the country's in the state it's in is that we're on a permanent lockdown, I think. And I'm not saying we should all go out and throw away our masks and start, you know, doing raves, but we should be living our lives normally within certain reasons, because this is an unnatural state, and it's now boiling over, obviously, into this whatever is going on. And how do I know that? Well, I know that because I talk to doctors, I talk to my brother, I talk to people like that. Listen, this is a bad thing. It's highly communicated. You can get it easy. Most people survive. The vast majority of people survive it. There are outliers we have to protect. But you know, that's kind of life here, you know. And,
well,
and let me tell you something. I take all the precautions. I wear a mask. I wash my hands. I eat outside. I went to a very good restaurant in Greenwich last night, Pulpo. My buddy owns it, Ron Rosa. Had a great time. I had dinner with a couple of friends. I made sure we were outside with 3 heat lamps on us. You know what I'm saying?
Okay,
so
yeah.
That's me.
So life goes on. Life goes on with it. So the shirt I'm wearing, Charlie, it looks like a flag, but it's really, the title of the shirt was America in Distress. And I want to talk a little bit about what happened in DC and what we have to look forward to with the new administration. How do we, in your view, keep our country with such division and polarity and really a lack of civility between people who have different opinions? How do we become America again?
Well, there was always a middle ground. Okay, listen, the tail never wagged the dog. The AOC types were never, you know, in the old days, probably like 10 years ago, were never the ones in charge of the left. The radical Trumpkins were never in charge of the right.
Right.
They had voices, but they were not in charge. I think we kind of got to get back to that. level of discourse where the adults in the middle. Now let's see if Chuck Schumer becomes the adult. Let's see if Joe Biden becomes the adult. That doesn't mean you have to disavow, every bit of liberalism, but do you lead this country in a way that's more moderate, that kind of expresses your goals, kind of along the lines of what Bill Clinton did and even Barack Obama, or do you let the left control? If you let the left control, you're going to get more of what you got 2 days ago. I mean, this is a very divided country. The extremes are incredibly radicalized. What I don't get, and this is just me, why law enforcement allows this to happen. I mean, those riots during the summer, people breaking into, billy clubs are supposed to be used for that. I don't understand how those guys get in and walk in without someone smashing them in the head with a club. And I mean, you don't know if they're carrying bombs. I mean, they breached the protocol. If you get shot, you get shot. You know what I'm saying? You know what you're getting involved in. And I don't know how the police allow that to happen, because when
it's like they had a free pass to get into the Capitol.
It's just unbelievable. I don't know how you do that. I don't know how you allow people to destroy Midtown Manhattan during the summer without police. And by the way, I think the police want to do their jobs. I think they're being held back. And I'll tell you, when you have that type of breakdown in society, then it filters though through everything at some point. It filters through the economy. It filters through the markets. You get crazy ideas like the modern monetarist theory. Okay, let's just keep printing money. It's funny. It's like how much that I was listening to your last guest about just how crazy it is that we're debasing the currency as much. And, when will it ever happen? Well, it's going to happen at some point. Never before have you commoditized something that it doesn't lose much of its value. It's just history. I don't know when it's going to happen, but it's going to happen. And, the reason why we have Bitcoin at whatever it is, 4 gazillion, what is it today? Yeah. 40,000.
Can you wrap your head around blockchain?
Yeah, it's because, I've read, there's a great story in the New Yorker about that the reporter sort of like unwound it. I think it was Nick Baumgarten. I understand it basically conceptually. I don't think it's worth what it's trading at, but I can get it. There's a reason why people are flocking to that. Okay. And it's not because, they think the U.S. currency is sound. Okay. And these are warning signs that, there's going to be a comeuppance for printing so much cash.
Isn't that what we were talking about, Charlie? And everyone seems to be having their own version or talking about the Great Reset by the World Economic Forum. And, there's going to be maybe the IMF comes up with some type of new formula for currency. What do you think?
Probably. I knew the train was coming off the tracks when an esteemed epidemiologist, I think his name was Ossoff. I can't remember. If I got his name wrong, if it's the wrong guy, I'm sorry. Don't sue me. But an esteemed epidemiologist was interviewed, and he was on Biden's COVID task force. So you can find this out. Was suggesting that we should shut everything down, immediately. Do like a month or 2 month COVID shutdown, complete shutdown, and float like trillions of dollars of debt just to give people money. And I was like, oh my God. I mean, does this guy does he understand the way this works? So
you even have extremes there. You have extremes about shutdowns. And then I'd say the other extreme is herd immunity. Let as many people as possible just get sick, even though hospitals, ICUs are, as your brother would attest to, are overwhelmed. So again, where's the middle ground for us coming through this?
Yeah, his isn't quite overwhelmed, by the way. Some are in California.
Okay.
I mean, listen, I don't think we're quite at the, at the taking off the, just everybody be free right now, which is why they're not totally overwhelmed. Listen, here's what I think. I think the middle ground is something we need politicians. We need our politicians to do what we pay them to do, which is manage.
Right.
It's either total shutdown or for the most part. And some of the people that are doing it is like Ron DeSantis. I think he's doing it right. I look at the numbers in Florida. They're not flying off the track. They're flying off the track in California where you have full lockdowns. I mean, he's managing it. You gotta wear masks in certain places. It's not total freedom down there. It's more freedom. It makes New York look like the gulag. I get it, but it's more freedom.
Right.
And I think what we should be paying Mayor de Blasio here in New York, Gavin Newsom in California, Governor Cuomo, is to manage us through the crisis. What I don't understand, help me out here. Why can't, if masks do work, okay, why can't we have movie theaters at 50% capacity with everybody wearing a mask?
Right.
It's better than nothing. You know what I'm saying? If masks do work, and why are we just shutting down all the inside dining? Why let them? The 25% in New York was they found no relationship to 25% and COVID transmission. Forget about outdoor. You can't eat outdoors in California. What is that all about? And I just don't understand, like, some of these public policy. There's no management here.
Right. It's because it's state by state.
And manage it. And by the way, if you need more hospital beds, get more. I don't understand how you don't ask the federal government for more. I mean, listen, Donald Trump did something stupid 2 days ago. I mean, reckless, stupid, horrible, and he should resign like yesterday. I get that. But during the heat of the COVID crisis in New York, that was during March, April, May, when it was really bad. It's not like that now here in New York. During that, I mean, listen, he opened up the federal budget for us. I mean, PPE, you name it, beds. We had access to that. I don't understand why, Gavin Newsom and Cuomo and if any of these places that are being overwhelmed can't ask the federal government for more and manage this situation. Listen, you can't. You just can't shut down society. It's never going to happen. It's never been done before. It'll destroy the country. It'll be the cure will be worse than the disease, and they don't. And these liberal politicians don't get it. I mean, maybe they just like being in charge of everything. I don't know. I mean, it's just it defies a degree of logic.
Okay, so entering a new era, politically, with the Congress, the Senate, Democrats having, at least marginal control in the Senate, unexpected. How do you think we work out of this economically? I mean, we've been in a managed, central planned economy since, God, even back to the Greenspan days. Have you ever seen a situation where a former Fed chairman has become Secretary of the Treasury? I don't believe Robert Rubin was ever at the Fed. He was at Goldman and became Secretary of the Treasury. But what do you think of Yellen, who was part of the Kumbaya crowd with Paul and Bernanke when the markets were getting hammered a couple years ago, and Paul got the message, and we're on this course now. Do you see this just being a continuation with Janet Yellen at Treasury and Powell at the Fed?
Listen, I'm just a simple country reporter. Who am I to judge a brilliant economist? Which she's a smart lady. Don't get me wrong, smart person, I should say. If you look at her record, it wasn't that great. At the Fed, at the Treasury, did Bernanke and Yellen, who were both at the Fed, really grasp what was going on Wall Street during the early days of the financial crisis? I mean, they were kind of clueless early on. I remember I covered it. I mean, if you remember it will
be contained.
Yeah, it would be contained. I mean, it was just, and then it wasn't. And then, all hell broke loose. And then there was a public policy, effort to clean it up. And, and you got a guy like a bureaucrat, like Geithner and Paulson, Hank Paulson, who was at Goldman as well, and Treasury Secretary, bureaucrats like that, kind of, they know how to throw money at stuff and figure out programs. So that's what they're good at. They're not good at catching this stuff early. And I remember it was funny because CNBC caught a lot of flack for allegedly, it was so weird. Like the right wingers and the people at Bear Stearns were highly angered at us for whipping up a frenzy that there was a problem. and that they thought we caused a run on Bear Stearns and Lehman, because of our commentary and covering the stuff. The left, like Jon Stewart, who hated the fact that Rick Santelli had his famous rant about printing money and that created the Tea Party,
right.
thought that we were too easy on Wall Street, and he would pull snippets of stuff out of context where I would say something like I was doing, for example, I'll never forget it, in his famous attack on CNBC. This shows you how disingenuous he was. I did a story early on that AIG was in big trouble. You know, this is before the bailouts, and it was like 8-9 months before the bailouts. And I said, listen, they're not going out of business. And then I said, but they have this big issue, and a lot of people say they're going to need write-down, blah, blah, blah. So he takes a snippet of my quote and says, they're not going out of business. And then it says, AIG blows up. And I'm like, you friggin' idiot. I was attacking them. They hated me. And I tell you, that's what CNBC kind of got hit from both sides. But the reality is we called attention to this. Now, how would a bunch of friggin' journalists call attention to this, and you're Ben Burnett can't be like, Bear Stearns went out of business. What is this? I mean, you know?
Kramer's rant. They don't know what they're doing. Kramer's rant.
And for all his negatives, he called it too, right? And he was a guy that he's got issues, but I'm telling you, they were clueless, and she was part of that clueless brigade. And I'm more or less worried about her, though, to be honest with you. Is like, where does the Senate go? Does Biden actually, just from a fiscal policy standpoint, does he actually, even though it's still divided government? I mean, remember, they control the Senate because of a tiebreaker of the vice president.
Right.
Does he go full on with all the crazy stuff he wanted to do from a fiscal policy standpoint, Green New Deal, all these higher taxes, based on Kamala Harris being the tiebreaker? I doubt it too. And I think that's one of the reasons why the markets are kind of like up, to be honest with you. They don't think so. But if he does that.
Yeah. All right. Well, they're euphoric, Charlie. Okay. They're not just up. They're euphoric.
They're
what are your hedge fund?
Because
go ahead. You're
going to ask me, what do my hedge fund guys say about that, right? I mean, here's why they're euphoric. They're euphoric because never-ending printing money, which these guys, stock traders, look at the, they have the attention span of fleas, so that's good, right? They're euphoric on expansive fiscal policy, and they're euphoric that even though it's nominally the Democrats control the Senate, it's still wickedly divided government, and they don't think Biden is going to do anything crazy. I could, what they're saying is like if the Senate was really 51-49. And it was a real majority, even if it's by one, that would be worse. The fact that it's 50-50 and almost 50-50 in the House is where people's minds are at in terms of fiscal policy. They just don't think Biden's going to go full on, and maybe he won't. And if you throw that on top of never ending money printing, just spend $2,000 checks coming. That's theoretic, and throw on top of it all a vaccine, which does work, by the way. My brother.
Are you going to get the vaccine, Charlie?
I'm going to get it in a minute. I could get it. My brother just got his second shot. He had, marginal adverse. Really, I mean, I think he said he was tired one day, like really tired. He slept a lot after the first one. He didn't have anything on the second one. Now, mind you, he's in very good shape. He runs, he does MMA, boxing. I work out a lot. I run a lot, and I lift. And so, I mean, I think if you keep in shape, you'll be okay here. But, we may not be typical, but I'm going to get it as soon as I can get it. So you throw all that stuff together. As soon as I get the vaccine, this is just my mind work. If you think about rationally, I'm going to Vegas with my friends. I'm going to spend a bunch of money.
Okay, and there's going to be a lot more sex too, right, Charlie?
I guess so. Not for me, but I'm just saying. I'm going to spend my time, and I'm going to spend my time eating some good meals, having some fun.
I miss that. Yeah,
I just miss the things like sitting in a bar and having a drink with a friend and just complaining about stuff in a bar.
Yeah.
You know what I'm saying?
I think that we all have a new sense of appreciation of things we took for granted after this, don't we?
Yeah, and I think we're going to be spending money. So if you put all that together, you know, the markets are kind of markets like, and you know, they look beyond, you know, I know they also don't take Donald Trump that's as serious as other people. Let's be clear.
Okay, so Charlie, really was nice talking to you, and you know, I hope we could do it again.
Okay.
What are you looking for as far as what may be, wrap it with what you think could be the next major event that we're looking at in 2021 that John Q. Public should be aware of, because you're a watchman for them.
Yeah, I mean, I think how fast the vaccine gets rolled out is key for the economy. If it gets,
Okay.
If you light a fire under these guys, you know, maybe, you know, the economy will come back fast. It's the best stimulus package you can ever get. How much does Joe Biden go to the left? I think the other knowns are known. I mean, we know they're going to keep printing money. We know that, you know, what the Fed's going to do. Fiscal policy is a question mark. The vaccine effort is a question mark. And I think that's just the two things. If I was an investor, I'd be watching.
Okay, well, Charlie, you know, you and I may have some different political views, but you know, we proved today that we could have a conversation.
Rational,
and that
right.
and you know, and we could like each other. I long for the days when Tip O'Neill and Ronald Reagan could adjourn Congress and have a drink together, sip brandy together.
You know, listen, Tom Daschle and Trent Lott used to do that, believe it or not.
Yeah.
I mean, it wasn't that long ago. So we'll see. We'll see what happens.
We'll see if Mitch and Joe get together and break bread together. That's my hope for 2021.
That sounds like a good deal.
All right, Charlie, really, thank you so much for your time. I enjoyed talking to you. Thanks for coming here and sharing your views and your journey with us here on Face.
Thank you, Dale. Appreciate it. Bye-bye.
All right. Okay, that's a wrap, everyone, for our interview for our week. And remember, don't just count your pips, count your blessings. Hope you guys enjoyed seeing Charlie. You know, I hope to get him back again. It was enjoyable to me. I hope to get a haircut like Blake did. And why don't you guys just sign up and hang out with the traders in the chat room in 2021. You're welcome, everyone. Okay, have a great weekend. Yeah, nice hairstyle. Shabbat shalom, Amira. Inshallah to all my Muslim friends. And peace, most of all, peace to everyone. Adios.